Hi, I'm Roland, the president of Roland Financial Wealth Management, LLC. Now, we've all heard the saying, death, just like taxes, is unavoidable. However, while we don't like thinking about death, we need to have plans in place for loved ones who rely on our income by having life insurance. Life insurance can take care of funeral expenses, lingering debts, and day-to-day expenses that may burden those you leave behind. So, if you don't have life insurance or you do have a policy but you're not sure if it's sufficient for your needs, I'm going to show you how to evaluate today your coverage needs. Now, you may be surprised to know that buying a policy doesn't make sense for everyone. Sure, life insurance can be a helpful financial tool, but if you're single and you have no dependents with enough money to cover your debts as well as the expenses related to your death, then you may not need life insurance now. But if you have dependents who are counting on you for financial support, life insurance is extremely important. See, if you're the primary provider for your dependents or you have a large amount of debt that's more than your current assets, then insurance, it could help your loved ones if something happens to you. Now, life insurance could also be a good decision if you own your own business or you co-sign debts that someone else could be on the hook for if you pass away. Now, when choosing a life insurance policy, focus on how much money your dependents will need. Now, choosing that amount that the policy pays if you die depends on a couple of different things. So we often recommend to clients to purchase about 7 to 10 times their annual income and coverage. But keep in mind, your personal number may actually be higher or lower depending on your circumstances. So here are some of the most important considerations for choosing a minimum amount of life insurance. First, let's look at the debts. So debts like student loans, car loans, mortgages, credit cards, personal loans, etc. So let's say you have $200,000 on your mortgage and a $4,000 car loan. That means you need at least $204,000 in your policy to cover your debts. Now, you should take out a little bit more to settle any extra interest or charges as well. But the second biggest use for life insurance is to replace income. See, if you're the sole provider for your dependents and you bring in $40,000 a year, for example, you'll need a policy that'll pay out a large enough amount to replace your income, plus a little extra to guard against inflation for a number of years. Now, there are other people in your life who are important to you as well, and you may want to insure them. But remember, you only need to insure people whose death would result in a financial loss to you. Now, though the death of a child would be emotionally devastating, it wouldn't cause a financial loss to your family. But however, the death of an income-earning spouse does create both that emotional and financial loss. So this also goes for business partners with whom you might have a financial relationship. You may want to consider a policy for that person, as that person's death will have a big impact on your financial situation. Lastly, keep in mind when thinking about life insurance needs, another way to calculate it is simply to multiply your annual salary by the number of years you have left until retirement. So if you're 40 years old and you're currently making $20,000 a year and retirement age for you is going to be 65, you subtract the 40 years from the 65 and that leaves you with 25 years. Multiply that $20,000 annual salary by 25 and that would result in a need of about $500,000 in life insurance. Now, if you're wanting to discuss your life insurance needs in more detail, give our office a call at 814-833-2999. Again, that's 814-833-2999. We also have very conveniently on our website at rolandfinancial.com a quoter. It's right on our resource page. All you have to do is go again to rolandfinancial.com and just click on the resource page and check out that little quoter to see what your costs and what your needs might be. In the meantime, bye for now.